Good afternoon, everyone. You're all very welcome to Thursday's US session open, obviously for the US markets at 2:30. So we're just coming up to it now. We're 10 minutes from the bell. So what we'll talk about the indices, how the indices market dynamic is reacting broadly. We will obviously be looking at the cross asset scenarios. We'll be looking at the volatility. We'll look at the treasuries, the DXY, and obviously the commodities as well. So broadly speaking, today we have seen, and this has obviously been the kind of the narrative for today's call, we have seen the stocks and indices halt some of those gains from Tuesday. Whether we're seeing a midweek reversal as of yet is still early days. But if you look at the volatility from Tuesday, massive spike has kind of petered out. There's been a lot of profit taken up here around this 4,500 levels. Of course, we talked about it yesterday on our 220 Zoom yesterday afternoon. The Nasdaq is coming into some tension at the level kind of noted at the highs of the week, as too is the indices. So the Dow Jones as well. So broadly speaking, indices at this moment are finding highs, a lot of resistance up here at some of these weekly highs currently speaking. Of course, we had CPI data Tuesday, with UK CPI yesterday. We had more additional data points yesterday afternoon. And of course, the claims data today has also followed up. So broadly speaking today and yesterday, the data was pretty good by all accounts, but we're not seeing that overwhelming follow through. That kind of initial exuberance that was witnessed on Tuesday, we're not seeing the sentiment there to really kick these indices on as of yet. Now, things could very easily change in the next 30 minutes, but into the 2:30 open today, we are still seeing a lot of these indices facing some headwinds, pressures at some of these weekly highs. So as I said, S&P's at 4,500 has been a fairly contentious day. And of course, even in the last half an hour or so, we have come off that 4,500 level again. The NAS has reacted quite prominently underneath this 15,850 level, which of course was yesterday's point of control, and we are considerably below that today into the open. We're approximately about 60 points below that currently speaking. And of course the Dow Jones as well, this 35,000 level, we reacted off it last night, we gapped down, we came back into it today, we had a bit of a point of control here. You will have seen as well the data 130, we actually saw, despite fairly good data, we actually saw the indices sell off. Of course, we got that rebate or reimbursement back into that value area, and in the last half an hour or so, again, we have come off that point of control. Now, I've taken shorts. I'm currently short Dow Jones and I'm currently short the S&Ps through the course of the afternoon. I'm looking to see, can we start to see a little bit of a breakdown in the price action? We've come in, we've found some clear resistance up here at these levels. The sentiment really isn't being backed up, and we are starting to see the markets become a little bit more entrenched to the downside. Now, whether we see these breaks, of course, will be dependent on how the markets react in the next 30 minutes or so. So by 3 o'clock, we'll have a fairly good idea whether we're seeing that downside correction. We're seeing a little bit of a baiting from those very, very aggressive spikes on Tuesday, which you'll see here, and whether we actually see some sort of moderate pullback, a moderate midweek reversal to that degree. Now, of course, we're heading lower into the open. We've had fairly stock headwinds, obviously, from Tuesday. The markets are becoming a little bit more consolidated, a little bit more choppy, a little bit more back and forth. So when you tend to see profit taking from one narrative, like, for example, on Tuesday, you then have to have a period of consolidation, accumulation in a value area, in a range where the markets can pick up some volume again, because of course that's what moves the markets, more broadly speaking. So as I said, into the open today, we are seeing market dynamic very much kind of halting out. That's why obviously we said gains have been halted. We've seen a little bit of selling pressure in the last half an hour or so, and we're seeing it across the board. We're seeing it in the NAS from the highs of the day back into this value area. We're seeing it on the Dow Jones, clear reaction back up to the value area, clear rejection. We're selling off into market lows. So we're really looking to see, can we see that follow through? Can we see that price action breakdown? Because that's personally what I'm looking for today within the plan. And of course, the S&Ps, very similar to the NAS, obviously a break higher, takes the highs back into the range again, starting to assimilate more selling. But broadly speaking, if you actually look at it, we've reacted underneath yesterday's point of control. We've come back up to yesterday's value area. Nice little reaction around here, back in through again today. And of course, on the day, you'll actually see a fairly tight range in the order book around that 4,500. So 4,500 should really be the focal point today, as we look at the S&P sentiment through 2:30 into 3 p.m. Now, if we look at the other broader markets, we're still seeing the dollar remain fairly range bound between this 104 handle, 104.60. Not too much really to talk about there in the FX space, of course, with the DXY trying to pick up some strength. that could be a good thing. So we are seeing the dollar up marginally in the last half an hour ago from a little bit of volatility at 130. But we're looking to see how does the price action develop out of this range, because of course, if we continue to remain range bound in this area, then the likelihood is the NAS, the S&Ps, the indices follow suit. They remain fairly consolidated, remain fairly range bound, and we very little to really kind of pick off upon unless we get kind of a more definitive move out of that. In the yield scenario, we've talked obviously this week about the yields at 4.5%. We were under it temporarily on Tuesday. We did come back up to it yesterday. I did mention the idea of price action maybe coming back up into this 4.6 level if it was to be kind of super aggressive. It obviously hasn't done that. We've kind of found our bottom again around this 4.5%. So 4.5% really should be the level of consideration for the week to see whether we can actually break through it and assimilate even greater declines to the downside. At this moment in time, we're just about hanging in there. So of course, that should be kind of option number one for those of you who trade bond markets and obviously who look at the treasury yields as well in the back end. In gold, obviously with the 130 data prints, we have seen gold this week continue to obviously spike. We saw it spike on Tuesday. We saw that aggressive move on the data point on Tuesday. We did see a little bit of a pullback yesterday, held this weekly area over here around that kind of 58, 60 level. We've been kind of mentioning it now for the last week or so. This area here has held up relatively well today. Now, my personal objective or bias is that we probably see gold try and climb further. Now, we are at session highs. We are at weekly highs around the 70, 75 level. We would be looking for a kind of another move out of the DXY really to allow that move back up into this 85, 90 level. Not to say it can't get there. Obviously, you've got this short-term area of interest, as I said, around 75. And of course, if that extension does break up, you've got an extra target area here up around 85. Other than that, there's probably not really too much to say about gold, other than the fact that it has aggressively spiked. It is testing the highs of the week, and we're starting to see a little bit of a headwind coming in there as well. So obviously, just being conscious of that as well for those of you who trade the gold markets. In the FX space, meanwhile, obviously with that, the fluctuations back and forth in the DXY over the last few days, the FX pairs have become a little bit more choppy as well. You'll see it in the euro. It's obviously been navigating between kind of 108, 108 on the upside or just above 108 to kind of 108.80. So we're kind of in a 50-point range for the last 2 days or so, really since Tuesday evening. And cable as well, obviously following that through. So yesterday with the CPI, we did get a fair clear breakdown in cable prices. We found a bottom around that 123.80 level. We have spiked back up today and we are selling off back into the range again. So really from an FX perspective is, can the DXY break through this range? Can we take out these highs? Can we assimilate an upside recovery in the DXY? Because of course, if that happens, then we'll probably see the indices break. Then we'll probably see the euro dollar cable prices continue to descend to the downside. So that's pretty much where we are in a kind of a quick overview. You'll see as well, as I said, the S&Ps, this is going to be the interesting area of today on the shorter perspective, is the S&Ps here around kind of 94, 95, up as high as 4,500 to see, can it break out through these lows? We're kind of getting very, very choppy back and forth movements. So we do just have to be conscious of that. Same again with the NAS. We've obviously taken the highs of the day. We were at the lows of the day just prior to the data that came out of 130. So overall, again, market dynamics, you're looking for that kind of 750, 780 level lows to be taken out if we were to continue to see that kind of bit of a pullback against some of those fairly clear moves that we witnessed on Tuesday. In terms of that, and the platform has logged me out. So let me just pull that up again on the side screen. Overall, the dynamic is clear. So obviously we have it here. We have the point of control. So we're obviously seeing point of control around that 4,500 level. So that becomes the key. On the NAS as well, very, very quickly. You'll see the NAS down here around this 15,800 level. So 15,800 will become the critical evaluation point through the course of the afternoon, particularly in that first 30 minutes. And you can actually see it there very, very clearly. NAS is pretty much coming in around that. So we are trading underneath it pretty much across the board. S&Ps, NAS, and Dow Jones were all comfortably trading underneath points of control. We haven't broken out of session lows yet, and that's really what we'll be looking at 130 as or 230 as the market's currently open. Now, when we go to 230, the markets are just currently opening up at the minute. So we normally say give the markets that first kind of 2, 3, 5 minutes to breathe, because of course the execution of orders across the board is going to come in. So even obviously on the short-term perspective, we're seeing a little bit of a spike there. S&Ps is spiking up narrowly as well. Nas is funnily enough is actually not spiking as of yet. It's still kind of holding at those lows. So that's going to become the narrative for the day, to see how does these markets react, and can we break out? If not, then of course we will obviously be looking to evaluate the upside. Of course, breaking back above points of control is your first gauge, and then obviously how does the market dynamic react at session highs, to see can we break out of these consolidated regions that's been holding up really since Tuesday evening's market close. Other than that, in terms of market dynamic, there's not really too much else to talk about. There is, of course, a number of central bank speakers throughout the course of the afternoon. So we've got Waller speaking at 3:30. We've got Ramsden from the Bank of England speaking at 3:45. We've got Cook and Mester speaking at 5 o'clock. And I do believe there was a number, or there was, yes, of course, there was Williams and Nagundu speaking just prior to the open as well. So we have, I think it was 14 or 16 central bank speakers between today, yesterday, and tomorrow, all weighing in with their inputs and commentary of where they look at the markets and where they perceive the markets to be at this minute in time. So just keep an eye on those for like short-term spikes in volatility, your 20 points, your 30-point moves, etc. In terms of tomorrow, then, to end the week, obviously, given the CPI data we've had Tuesday and the PPI data yesterday, there's not really too much to end the week other than kind of retail sales, retail numbers in the UK tomorrow, some commentary from Lagarde tomorrow morning. But other than that, then you're really looking at building and permits in the US in the afternoon. And effectively for that would be probably the end of the week in terms of extreme volatility. Of course, we will continue to monitor the geopolitical elements, because of course any spikes with conflict in the Middle East will obviously see gold spike $8, $10, $12, and that could be the potential narrative. That could be the catalyst for gold to come up here into some of these higher time frame liquidity areas as such. So that's what I'd be looking out for on that one, if you are currently trading gold actively or proactively this week and over the next week or so as well. All right, so that's pretty much it, folks. Overall, as we said, S&Ps, just as we round off, still holding under point of control. It's actually come back up to it and is maintaining below. So unless we kind of pivot back above point of control, the probable bias is maybe a little bit more tilted to the downside. The Nas is still holding session lows. We're just about holding those session lows, and the Dow Jones is, like with the S&Ps, still comfortably under this point of control level here around the 960s, 970s. So that would be kind of the barometer to gauge for the day. Anything between kind of 34,950, 35,000 is effectively back into this session range this morning. So unless we're really taking out the highs of 35,000 and echelon to the upside, the likelihood is it could well be like a spike, because of course you had it yesterday, we spiked, we came back down into the close, and of course this morning we spiked, and on the data point we didn't move lower. So markets becoming a little bit more consolidation in that regard. In terms of the VIX, probably just the final point to note for today, VIX volatility, we know it's been down all week. It hasn't really done anything more than the fact that it's been trading between that kind of 14, 15 range. And you'll even see it at this minute, it's just about holding on to 14 on the downside. So of course, Tuesday, with that spike in CPI data, it's come into 14. It's trying to break through 14. So if that VIX continues to edge lower and we see the DXY falter off, that could be the catalyst then to see this indices break back higher, at which point shorts will be taken out, exit those short positions, and then just wait and see how does that long narrative, does it develop, does it become something more sustained into the afternoon. All right, that's pretty much it, everyone. As always, trade safe. Any questions, feel free to obviously ping it into the Telegram community. We will be on board through the course of the afternoon, and as always, have good risk management.